Hey everyone, it's Mozart here. Today I'm going to talk about, well, probably one of your favorite topics. This is what is happening in the blockchain in general now, what I think will happen next, and how. Not just February closed, but how. This whole sideways movement went, how it went, starting, probably, from mid-November, when the price was in the area, there. So, $93,000. And now, essentially, it's back to those same levels, and has stayed there. So, the first metric is the entity-adjusted realized loss, which is the realized loss in dollars adjusted for what's called entities. Why do we adjust for entities? Because it often happens that one big wallet owns, well, not a wallet. One large whale can pay hundreds of wallets if by the standard interpretation we will evaluate the loss of each of these wallets out of each of its hundreds. This will blur the overall picture. So, with the entity adjustment, we take all his wallets. We understand that all these wallets belong to him because they all interact with each other constantly and do not change this interaction. And we attribute all those losses specifically to that entity. So, what's interesting and noteworthy is February 3rd. On the squeeze. Lesion. In dollars, this is purely Bitcoin. I'm not looking at the market right now. I'm just focusing on Bitcoin. Bitcoin was $510 million in realized losses. So you understand how big it is. Here's the section. Let's take a look at the supply over the last year, and let's actually go back even further, from January 2024, for a year and 2 months. So let's draw this line. This is a loss in dollars, and this is the largest loss since July 24th, and also since August, when there was a carry trade in the yen. Since the beginning of this cycle, after Trump's victory on November 6th, that is, somewhere around here, on November 6th, this is the largest loss. In fact, it's so large that it's about twice the size of all the previous losses, combined. That's a really big loss. AA. If we also look at all the similar, large losses over the past year, or even better, starting from October 2023, when the official cycle began and talks about the Bitcoin ETF started, you'll see that almost all of those similar losses, whether it's January 2024. So, what about after the actual approval of Bitcoin ETFs or any other dates? Well, all these dates, when you can compare these losses, they all marked the bottom. Each of these losses marked a bottom with a reversal, either from the current ones or through some consolidation, or probably there was one exception. So, here, in September 2024, we turned around after a second bottom. But it was updated by about 4, 5, 6%. I don't remember. So, not by much. As for everything else, here, 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 and here. And even within the current pump after November, there was almost always a bounce back. At the very least, a bounce back, even if there was a correction afterwards. Like, for example, that was after July. There was still a strong bounce back. This one right here. And now, we have fixed this loss, and the price is standing still. It's just sitting there. The range has narrowed incredibly a lot. So, the exit from here is going to be strong. The only question is, where is it going to go? Considering that we don't have any clear and quick reaction after this loss, I'm allowing for one scenario. I'll say it later. But for now, we'll accept this. Keep in mind what I just said. All that is there is the biggest loss since August. After the carry trade, we will go from July. That is, over the last year and a half there have been 2 such large ones. There would not have been more losses. But if we adjust all of this, not in dollars, but in Bitcoin, then we get a pretty standard loss. Well, is it clear why? Because if before, Bitcoin shot up to, say, $40,000, like in January 2024, now it's worth $90,000 or $100,000. It's clear that the losses in dollars will be greater if we lose the same amount of Bitcoins. That is, the loss in Bitcoins is more conservative, but it's also the biggest one during the latest wave of growth. So, after Trump's victory, it's the biggest one. And it also exceeds all previous losses by more than double. In terms of size, it's all the same. They look a lot like the losses from September and October, really similar, like the September loss. Yeah, so the carry trade, and then there's the July loss. And then the loss from May, and here we have the attack from Iran on Israel in April. The same thing. In each of these cases, there was an immediate rebound, except for the fall of 2024, which had another adjustment. A correction, but not a big one. That's been noted. So, that's what concerns the realized losses across the entire system. The first option was in dollars. The second option was in Bitcoin. So, that's the realized loss in BTC. Let's move on. Now it's interesting to look at the same thing, but broken down by cohorts. The first one. This is our LTH loss. It's marked here in blue. I'll also start from the beginning of 2024 for the sake of objectivity. It's highlighted in blue. That's when long-term holders realize their losses. Let me remind you that in the blockchain, long-term holders are all those who keep Bitcoins in their wallets more than 155 days. So, they're considered to be a bit more experienced, and they can ride out deeper dips, knowing a bit more than what's called fresh money or short-term impulsive money. And the losses of short-term holders are everything else. The red color. Interestingly, the last time long-term holders realized the loss was only in October 2024. Since then, they haven't realized a single loss. So their confidence is quite evident. And, in my opinion, it's objective. I'm generally confident too. And I'm also a long-term holder overall. I can speak for myself. And even during the drop on February 3rd, which seemed like a really strong drop, well, you could have cut back just in case if your average entries were somewhere around 40. No, not a single one flinched. In general, everything was clear throughout the whole flight. Well, okay, there was a reduction of positions by $100 to $1,000. Well, someone is there. From the old shrimp. Let's say someone got scared. Overall, nothing happened. That is, here the entire loss belongs to short-term holders. I will not consider it. These are essentially the same metrics that I showed earlier, only broken down into cohorts. It's also important to note that here, only the short-term fresh money, the impulsive money, would be the ones leaving the market. They're considered retail, and for obvious reasons, it's a pretty common occurrence in the market, especially after a dip. Now, we can take a deeper look and see who among the short-term holders actually took a hit. It was a serious cleanup and the largest one since August 5th, 2024. Now we can take a deeper look and see, even among the short-term holders, who took a hit. The biggest loss for this will be highlighted on February 3rd. And let's take a look at this table. So here we see that this is where the main losses were incurred. What's really interesting is that even in the cohort of short-term holders, those who have been holding for more than 3 months didn't flinch at all. They're holding on to these Bitcoins, who mainly closed their positions. From 1 to 3 months, there were losses of $14 million. The biggest losses were recorded by completely new money, those holding Bitcoins for just 1 week to 1 month, totaling $480 million. And about half, roughly half, of that value got locked in. Even more. New money from 1 day to 1 week. So, those who bought Bitcoin in the last 24 hours were shocked, recording a loss of $70 million. They were shocked, recording a loss of $70 million. They just came into the market, were promised a lot, and then bam, right into liquidation. So, overall, there are 2 main cohorts that recorded this loss. And overall, their range is from 1 week to 3 months. There's also a sensitive cohort I showed you in previous blockchain reviews that really, well, this is the cohort. It's a turning point for them, with their average purchase price sitting around $92,000 to $93,000. And in any bullish cycle on Bitcoin, as soon as we drop to it, we could break through, we could not reach it, we could run right into it, but each time we bounced off it, this was considered a very strongly expressed right correction. Now, I think we haven't gone through the same thing yet, but we approached it and ran right into it. Although, at the same time, the average purchases across the entire short-term holder cohort, meaning from 24 hours to 6 months, are still a bit lower. It's around $92,800, but they're just a little short of that. Give me. Here's an interesting, more global metric, so-called RV extreme deviation pricing. What does that mean? MVR and metric, market value divided by real barrel. That is, we take all market participants without dividing them into cohorts of short-term and long-term participants. We're calculating, on average, across the board, what their current state is, whether they're in profit or in loss. Well, right now, of course, they're in profit because the share of long-term holders is very large. And we look at what kind of profit they're in. Next, we take this average line for the past year, what's called a one-year rolling window, meaning a one-year moving average. And we believe that they now have. Roughly speaking, according to the MVR, the average current value is $96,900, and we look at the so-called standard deviations, where the price can react from above. This is plus 1 sigma, and 2 sigma, that is, 1 and 2 standard deviations, and below. This is minus 1 and minus 1.5 sigma. Why minus 1.5? Because minus 2 never came. And by the way, speaking from the point of view, it is always more profitable to be on the form for a long time, in the context of more than 10 years than in short. Because we have seen minus 1.5 sigma a couple of times, and we have seen plus 2 sigma much more often. So, historically, as soon as the price reaches your min line, that is, the middle line, right now, it's sitting at around 96,900. So, within the current price range, this has always been a bounce point in regular markets. If we break through it downwards and consolidate below it for a while. So, for example, like it was here, this was July. Oh, I apologize. Here is August. August, drain, August 24th, all of us. For some time can walk under this line and even go down to minus 1 sigma, as it was in September 24th. So, that can happen when there's not enough liquidity, and we start hitting the support line of some cohort of long-term holders, while all the short-term holders are getting shaken out of the market. This doesn't happen often, usually more on regular markets around the mean line. That yellow-orange line is holding up well, it really keeps the trend. And even back in May and September 2023, we didn't even touch it. By the way, speaking of the banking crisis, the collapse in March 2023, the bankruptcy of Silvergate, and so on. I think you all remember those bankruptcies if you were in the market back then. Then the 21-year cycle broke through this line with the ban and mass reduction of miners. We dropped to minus 1, consolidated, and almost reached minus 1.5 sigma. Next, the bull market of 2017. Everything is actually looking good here. We held strong, meaning. So we could come to this line, flash it, flash the middle one, hit it or not reach it. Just a little bit, but then each time we bounce back up. Right now, we've come to it. We've actually been trading around it since February 5th, and it's been 3 weeks of trading. So, this situation is not very clear to me, of course. The exit from here will be strong. But it will be. Well, I'll tell you which one in the end I won't be able to reveal the intrigue right now. To announce. So, it's a pretty strong metric that shows, roughly speaking, some average value of the MVRV standard within the framework of an annual moving window that's typical for the market. And also its deviation. That's plus 1 sigma, plus 1 standard deviation, plus 2 sigma, that's the red line. As a rule, the red line marks the peaks of a bull market, and that's where you need to scale back. Minus 1 sigma ideal entry points within a bull market. For example, this was in August. And minus sigma only happens during a bear market when we drop to the blue line and below. That is, as it was, for example, in May 2022 and in the summer of 2022. It was also at the 2020 coronavirus crash, March. In about 20 years, these levels might only be achievable in such situations. In the current conditions, this is very unlikely unless a third world war or something similar starts there, or the asteroid that bought the dinosaurs does not fly to Earth again in the current market conditions. This achievement currently seems pretty unlikely. Although, things have narrowed down so much after the acceptance of Bitcoin and ETFs that even minus 1 sigma is now at $87,000. Well, basically, I allow for that and I'll just average it out. Well, you know, I've already said all of this, so I won't repeat myself. Minus 1.5 sigma is 80, which is already much less likely. Next, let's talk about the altcoins. Yeah, a lot of people wanted to hear about the altcoins, so let's go. I'll also say what's happening with the altcoins. So first, let's take the total market cap of all the altcoins. All the altcoins. Without Bitcoin and without Ethereum. We're excluding them for the sake of objectivity. Everything else. Let's take a clear average line. We'll look at the market cap over 2 weeks. To filter out the noise, we really need to jump around a lot. If we take it day by day for 2 weeks and look at it, let's see what happened. Look here. We had 2 huge washouts from the market. One, on December 20th. I think each of you remembers. This day, positions were reduced on average over 2 weeks by almost $250 million. And then by February 3rd, it was also down $240 million, and those were 2 huge washouts. Let's first look at how to calculate this data metric, what it all means in general, especially in dollars. These 2 huge sell-offs were the largest since May 2022, when we had a wild bear market, really intense, right in the thick of it. The biggest sell-offs in dollars were during the Iranian attack in the July dump and the August dump. And we had September-October, when on October 1st, the rockets flew again. Did not exceed these 2 sell-offs. Next, the red lines at the top show in which period the previous peak is surpassed by the sell-off. So, that was May 2021, and that was the first serious sell-off. By the way, speaking of that, the Chinese ban on crypto. Next, we averaged out and updated these values. Values in May 2022, and we got close to them again. Here and, well here, under. So, in this sideways movement overall, that is, this line shows how many days we've been within the last similar major liquidation level. So up until that point, it was about 11 days. And after December 20th, it was 12 days. So we went into a more serious deviation for 1 day. This clearly and vividly shows how strong the liquidation in the alt was. Just how much retail was washed out there. Especially, how much leverage positions were cut down. Next, the same thing, but in percentages. The same thing. Let's also take. Here, the picture will be a bit different, but still very similar. If we look at the percentages of the sell-offs, then these 2 current washouts from the market are starting to look similar to what we saw in July 24 and August 24. And after the Iranian attack, things start to change. That's similar. And by the way, speaking of which, the collapse of FTX is also very similar in percentage terms. That is, in principle, these are the 2 largest liquidations, after which the market bounces back very strongly. Moreover, more often than not, he even bounced back after 1 liquidation, but here we have already waited for 2 liquidations. And combined with my previous reviews on total 3 in the weekly time frame, let me draw a certain conclusion at the end of this video. This is Bitcoin on the weekly chart. So here, basically, you can see that 1, 2, 3, 4, the last 3. For at least a week, we've been swinging in a very narrow range. In a very narrow range. There will be a strong breakout from here. And considering everything I've just shown you, again, I'm sharing my opinion. From what I've shown, you can form your own opinion. I have shown facts that I can simply interpret. For those who do not understand the glassnode, you can interpret them in your own way, as I interpret them for myself. That is, unloading by indicators, by the number of percentages of profit, by liquidations, by losses. It is sufficient, and it is already approaching the peak in bull markets. That's why, from a risk-to-profit perspective, it's more likely and more reasonable to hold a long position right now, at least for another test of this peak, even though I'm expecting a breakout. So that's the more sensible approach. So, from the perspective of risk assessment and everything that's already happened. And the thing is, at the same time, the stock market has been hanging out at highs for quite some time now, and Bitcoin hasn't caught up. And despite the fact that the money supply has long since begun to grow M2, Bitcoin is slowing down and is lagging behind this money supply. So far, the risk-reward is definitely leaning towards going long. It's just statistical probability, and that's what I focus on. But considering that on February 3rd, there wasn't any clear, quick reaction back up here. No, well, on the daily chart, we bought back in, but in the end, we're just trading everything. This thing. Although, we could have already gone a bit higher. I allow for the possibility. And this is a conclusion from previous videos that we can set this third bottom. Here it is, the descending channel. Here it is clearly visible. And we can come somewhere around here. We can put this bottom. If we come here, there's a high probability it will be quick with a spike and a very fast return. This is where I'll average down, either the same volume or a larger volume, most likely more. I'll take about 50% of the volume. Like I got in at 97 to 300, for example. Well, the current open long position. Even though I consider this scenario to have a lower probability. With a lower probability, but it's possible, we can't rule it out. You gotta keep all your cards on the table, and there should be a plan for each scenario. For now, I have a plan for each of them for 2 months. After that, there will still be a bounce, and the finger will be stronger than with Bitcoin because it's way more oversold. And the numbers I showed you in the chart. They say it was just a disaster for retail over there, like everything got wiped out. You can also see the trading activity. After Hank, Bybit actually dropped to almost zero. On all exchanges, especially with altcoins, memes, they just got completely crushed down to zero. The bounce will be stronger. How much? Here are my 2 main options. What conclusions can I draw from? From everything I've analyzed, you might come to different conclusions. You are welcome. I interpreted the charts for you out loud. You can analyze it and compare it with your own arguments and opinions, or with the opinion of another analyst, blogger. Whose opinion are you listening to? Total 3. My opinion here hasn't changed either. Here we have consolidation. We took out that liquidity, the drop February 3rd. That's more than enough. We have a plus here because we hit almost 61 and 8, so we can test again. Let's say 50 cents. Here we'll return to 800, but we can invest. On one mark 38.2, in principle, we can immediately, it bounces back to Thriller. Here too, there is no problem with this. Here it is purely 50-50. I can't guess, but this design is still looking up, this design. Since a month there have been more questions here, both about the Colt and about the Bitcoin, to be honest. But that's a topic for a separate video, not for now. Thanks everyone, I hope you found this review helpful. If you want me to periodically release such detailed reviews on blockchain, put a like and write a comment so that I understand that I am not wasting my time in vain, because preparing such a review takes much more time than just opening a chart and writing down what I think. Have a great week. This was Mozart, and see you all later.